If you want to control your spending and work toward your financial goals, you need a budget. A personal or household budget is a summary that compares and tracks your income and expenses for a defined period, typically 1 month. While the word budget is often associated with restricted spending, a budget does not have to be restrictive to be effective. A budget will show you how much money you expect to bring in, then compare that to your required expenses, such as rent and insurance, and your discretionary spending, such as entertainment or eating out. Instead of viewing a budget as a negative, you can view it as a tool for achieving your financial goals. A written monthly budget is a financial planning tool that allows you to plan how much you'll spend or save each month. It also allows you to track your spending habits. Though making a budget may not sound like the most exciting activity, and for some it's downright scary, it's an important part of keeping your financial house in order. That's because budgets rely on balance. If you spend less in one area, you can spend more in another. Then save that money for a larger purchase, build a rainy day fund, increase your savings, or invest in building wealth. It's very important because it helps you figure out how much money you get, spend, and save. Making a budget can help you balance your income with your savings and expenses. It guides your spending to help you reach your financial goals. A budget is especially important if you don't know where your money is going, don't save regularly, have problems paying off your debts, feel overwhelmed by your finances, feel like you're not in control of your finances, or want to make the most of your money, or are planning for a major purchase of a life event. Making a budget can help you set spending limits, find ways to pay down your debts, reduce costs and save more, live within your means, reduce stress, have more money for things that are important to you, and feel in control of your money. A budget only works if you're honest about both your income and expenses. To make an effective budget, you must be willing to work with detailed and accurate information about your earning and spending habits. Ultimately, the result of your new budget will show you where your money's coming from, how much there is, and where it all goes each month. To create a budget that works and allows you to live a comfortable and happy life, you need to get a firm handle on what you're currently spending, what you can afford to spend, and what your priorities are. Before you start a budget, think about your financial goals. Identify your short-term and long-term goals, and make savings for those goals that are part of your budget. For example, those goals may be, on the short term, paying off your credit card, reducing your weekly expenses, starting to build an emergency fund. And on the long term, you could be paying off all your debts, saving to buy a home, a car, or booking a trip, saving to have children, to go to school, or to retire. To deal with unexpected situations, create an emergency fund. Your emergency fund should provide you with enough money to cover your living expenses for 3 to 6 months. These amounts can sometimes seem out of reach. That is why you should start by saving a small amount on a regular basis. Having an emergency fund will help you reduce financial stress and avoid getting trapped in a debt cycle. While you can use old-fashioned pen and paper to budget your money, it's easier and more efficient to use a monthly budget spreadsheet or a budgeting app. These will contain designated fields for income and expenses in various categories, as well as built-in formulas to help you figure out your budget surplus or shortfall with minimal efforts. Number 1. Gather your financial paperwork. Before you begin, gather up all your financial statements, including bank statements, investment accounts, recent utility bills, W-2s and pay stubs, 1099s, credit card bills, receipts from the last 3 months, mortgage or auto loan statements. You want to have access to any information about your income and expenses. One of the keys to the budget making process is to create a monthly average. The more information you can dig up, the better. Number 2, calculate your income. How much income can you expect each month? If your income is in the form of a regular paycheck where taxes are automatically deducted, then using the net income or take-home pay amount is fine. If you're self-employed or have outside sources of income such as child support or social security, include these as well. Record this total income as a monthly amount. If you have variable income, for example, perhaps from a seasonal or freelance job, consider using the income from your lowest earning month in the past year as your baseline income when you set up your budget. 3. Create a list of monthly expenses. Write down a list of all the expenses you expect to have during a month. This list could include mortgage payments or rent, car payments, insurance, groceries, utilities, entertainment, personal care, eating out, childcare, transportation costs, travel, student loans, and savings. Use your bank statements, receipts, and credit card statements from the last 3 months to identify all your spending. Number 4, determine fixed and variable expenses. Fixed expenses are those mandatory expenses that you pay the same amount of cash for each time. To include items like mortgage or rent payments, car payments, set-free internet service, trash pickup, and regular childcare. If you pay a standard credit card payment, include that amount and any other essential spending that tends to stay the same from month to month. If you plan to save a fixed amount or pay off a certain amount of debt each month, also include savings and debt repayments as fixed expenses. Variable expenses are the type that will change from month to month, such as groceries, gasoline, entertainment, eating out, gifts, and if you don't have an emergency fund, include a category for surprise expenses that might pop up over the month and derail your budget. Start assigning a spending value to each category, beginning with your fixed expenses, then estimate how much you'll need to spend per month on variable expenses. If you're not sure how much you spend in each category, review your last 2 or 3 months of credit card or bank transactions to make a rough estimate. Number 5, total your monthly income and expenses. If your income is higher than your expenses, you are off to a good start. This extra money means you can put funds towards areas of your budget such as retirement savings or paying off your debt. If you have more income than expenses, consider adopting the 50-30-20 budgeting philosophy. In a 50-30-20 budget, needs or essential expenses should represent half of your budget. Wants should make up the other 30. Savings and debt repayment should make up the final 20 of your budget. If your expenses are more than your income, that means you're overspending and you need to make some changes. Number 6, make adjustments to expenses. If you're in a situation where expenses are higher than income, find areas in your variable expenses that you can cut. Look for places you can reduce your spending, like eating out less or eliminating a category, like a gym membership that you're not using. If your expenses are far above your income, or you have significant debt, reducing your variable expenses may not be enough. You may need to trim your fixed expenses and increase your income to balance your budget. Aim to have your income and expense columns be equal. This equal balance means all of your income is accounted for and budgeted towards a certain specific expense or savings goal. After you've set up your budget, you must monitor and continue to track your expenses in each category, ideally every day of the month. The same budgeting spreadsheets or app used to make your budget can also be used to record your expenses and total incomes. Recording what you spend throughout the month will keep you from overspending and help you identify unnecessary expenses or problematic spending patterns. Take a few minutes each day to record your expenses rather than putting it off until the end of the month. If you're not confident that you can budget your money, adopt the envelope system where you divide cash for spending into separate envelopes for different spending categories. When an envelope becomes empty, you'll have to stop spending in that particular category. As you use your budget, keep an eye on how much you've spent. Once you've reached your spending limit in a category, you will either need to stop that type of spending for the month or move money from one category to another to cover additional expenses. Your goal in using your budget should be to keep your expenses equal to or lower than your income for the month. Circumstances change. Our priorities shift. We change jobs, we move, and we have children. Make an appointment with yourself every few months to sit down with your budget and make sure it's working for your current goals and realities. If you've already got your numbers plugged into a program or a website, it's easy to play around with your budget categories to see where you can create extra room or prioritize one thing over another. Remember, your budget needs to work for you, not the other way around. Once you've set up a basic budget, customize it according to your financial situation and goals. If you work on commission, be aggressive in saving to help cover periods when the market is slow. If you have cash flow issues because you're paid only once a month, divide that payment by weeks and keep the cash you plan to spend in remaining weeks in a separate account until you need it. Pay with a credit card only if you will have the money to pay it off at the end of the month. Otherwise, you will owe interest on top of the price of whatever you bought. Adjust your budget monthly if you overestimated or underestimated your expenses. Keep an eye on large expenses that only occur every few months, such as insurance payments, and if you tend to overspend in certain categories, use budgeting hacks, such as switching to a cash-only budget. Once your expenses are lower than your income, budget towards saving goals before you increase your spending. Take time to learn other financial skills to improve your financial literacy and make your money work harder for you. If you enjoyed this video, make sure to leave a like and feel free to subscribe to stay updated with our future videos. Thanks for watching.